All right. Welcome, everybody. Thank you so much for joining this webinar. I'm Vinney Chopra, Vinney Smile Chopra. I smile a lot, and I've been smiling for over 50 years since I've been in this country, USA. I arrived here in 75, December 28. It's been just magical things for me with $7 in my pocket. Some of you might have followed me on the social media. My books are there in the back. I've written my fourth book. I'm writing my fifth and sixth book right now, also. But again, I like to give myself to everybody as much as lives I can touch while I'm here. I'm only 74, going to be 74 right there in this August. My wife says, "Why do you say 74? You're 73." But I always say to my mind, I'm only 37, opposite age. And I'll be only 47 in August, even though I'll be 74. It's about the excitement and all the positivity that really takes us to bigger, places. So I would take the privilege to share the screen with you all. And let's go here to my very first presentation, Asma, that you did. You started right there. Oh my gosh, what's going on over here? This is not it. Uh, bu- 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 yeah, Okay, maybe I have opened them up already. I should just minimize this and then we'll be able to go into all those right there. There it is. I knew it's there. So slideshow right from the start. Again, thank you so much for joining. And today's session is on 2026 strategic wealth and tax mitigation blueprint. Just a little bit about me. I'm Vinny Smile Chopra in to serve you. I'm from Danville, Blackhawk Country Club right here. With with real estate only, we were able to afford such a beautiful place and our family trips and everything. So real estate is amazing. It's amazing. It can make you millions of dollars. And today we're going to talk about how to not pay Uncle Sam legally that 50% or 53% actually I paid in California, staying in California, 37% plus 13% or 14% many times. Anyway, disclaimer, this webinar is for entertainment purposes only and educational. I'm not a CPA. I'm not a attorney at all. I want to say that again. I'm not giving this legal accounting or investment advice. I'm just sharing all the great things that I know into this webinar. It will be 1.5 hour long, very long, but please stay with me because I'll be able to give you all my four books at the end, and then you'll be able to interact with me and talk. Actually, I'll be stopping several times in between also to take your questions because that's the name of the game. And I want to help serve you as much as I can. I'm a mechanical engineer from India, entered USA, like I said, 50 years back. MBA, I came here to do MBA, Masters in Business Management, right there, George Washington University. I sold Bible books door to door. I've been husband for 46 years. I'm 45 right now, 46 years in April 3rd. Oh,
What are you
please,
doing differently?
Asma, please, Asma, please mute
Maybe I have muted.
people.
Yes, I have muted.
Thank you. Thank you. And a husband for 46 years and previous California broker for over 20 years, also a life agent. I have worked, I never sold or bought life insurance, but I'm very curious man. I like to really find out what's behind the scene and everything. And I'd really love to really do a lot of those kind of things. You could also follow me if you don't know me. My apartment syndication made easy podcast, which was number 6 in the whole country out of top 70 in the country. My Winnie and Bo show, also Abundance Mindset, and my books on Amazon. And that's my fourth book, by the way. Thank you, Asma, for putting that right there. That's my fourth book, just got pre-launched last week. But anyway, that's about it. And then let's go here. See, what happens is we are playing old book. Many of us investors who are in the high, they're making millions of dollars every year, or even 500,000 or 300,000. We are giving so much to the taxes. And that's what we're going to talk about how we could do better by not paying legally too much in the taxes, the expiration of the tax cuts, all that stuff, the purchasing power erosion is happening. Dollar has lost 96% of its value since 1910 or so. It's only 4% left. And every year, when we go from here, we need to be looking at where is the money, stagnant capital savings, I call it, for 2%, 4%, 6%. But we need to move to velocity of money. We need to invest. We need to move the money in nice places so that it can bring you 8% returns a year, 9%, 10%, 20%, 30%, or even give you 100% tax credit, which I'll share with you. What? You say, Vinny, what are you saying? Yes, there are places right here in USA where it will give you, you put 100,000, they give you minus W2 minus K1 for 85,000 right away, that you take it out of your income and pay zero taxes sometime. And then you get cash flow, equity gain, and then you also are able to get the rest 15%. So your whole investment is taken. Many of you probably know it. If you don't, I'll discuss that. So real estate is an amazing thing. It's the biggest haven. Millionaires, multimillionaires are earning millions of dollars, but paying zero taxes. Zero taxes. Business equity is amazing. Again, an alternative investment. So we'll talk about it. I took my $7 when I came to this country to over $1 billion in portfolio. We have sold a lot of portfolio, and now we are buying again like crazy. In 2026, we'll be buying 7 hotels. Hotels, hospitality is beautiful avenue. We'll talk about it, but 3 buckets of income. You have to put it that way. You have to see where is your active income, the W-2, 1099, and how much taxes are going out. Biggest tax burden is in the W-2 income and 1099 income. So we'll talk about that. Portfolio income from your stocks and bonds and other things like that. You have to show Uncle Sam how much dividends you made. So you have to pay taxes on those. That's capital gains tax. We call it high earners. Mistake high active income for wealth. That's the fallacy. We think that we are making a lot of money, but money is just going away in taxes. And passive income. That's where a lot of people are able to also come in syndications, which I'm a syndicator. I'm a fund manager. I've taken $220 million of my family, friends' money and turned that into 20, 30, 40% returns per year. And, I'm not saying anything. I'm not CPA. I'm not attorney, those who just joined. But I have figured out in getting coaching and other things done, how to really find the right properties, underwrite them well, and then put the money in there, my investors' money, and give them great returns. So tax advantage is huge in the passive income. Let's take a look at this one. Legal pivot, shifting capital. You've got to deploy that. If you have active bucket in the high tax bracket, you've got to go into the tax advantage vehicles. And I just want to go a little faster because we got 3 PowerPoints, and I'm going to stop right now because last time what we did was we wanted to interact and then find out where everybody is, and then we'll be answering your questions. That is my main thrust of today's presentation with you all. And thank you so much for taking time of your busy schedule to be here. The silver tsunami, I'm 70, I'll be 74, I mentioned earlier. Silver tsunami, 10,000 baby boomers are turning 65. 4,000 seniors are turning 80 in this country. In 14 years, 25% of population of USA is going to be seniors. What? One fourth population. The youngest population and the seniors will be all over in the United States. So we find all kind of things are there, low volatility, depreciation. I mean, you cannot do much, but in hospitality, which we're going to talk quite a bit, because I was a multifamily person, long time, made a lot of money for investors, but last 3-4 years has been very bad years, as some of you might know. The dried up everything, the cash flows are not there, and some have foreclosures have happened, all those things. But the key thing is we want to look into how can we really take the power of cost segregation, power of bonus depreciation, how could we really mitigate the taxes that we pay? That's what we're going to talk about, which is actually a paper loss. See, cost segregation, many of you might know it, but those who don't, cost segregation is the biggest tool in real estate to have the profit and loss, making a lot of money, cash flows are given, but because of the depreciating the property in 5 year category, in 10 year, I think there are places here. I think we show right there, Asma, right? Balancing cash flow and equity. You have to really get into some kind of good alternative tool so that you can save on taxes. So cash flow is there, equity growth is there, just like we do in syndication acts as a vehicle. Many of you know syndication, but if you don't, what it means is that people like me, they vet the market, they manage the assets, we find the deals, we are on the loan. I mean, just to let you know, I would love to let you know, I won't tell you where it is, but in Ohio, we just bought a hotel for $13 million, 1 3, $13 million. The replacement cost is $89 million. Today, if I have to build that hotel in this beautiful location of beautiful city, it's going to cost me that much money. So that's the power of vetting the market and finding the deals that nobody can even buy it. So we have very big circle of relationships and banks and all that which we are able to buy. We did the FaceTime with my partners today, this morning actually. They are right there in Ohio. So true passive income eliminates the three. Like no tenants, no toilets, no trash. And if you become a investor, or you can even become an operator with a good partner who can really take care of it, that is a good strategy. So active income plus passive paper losses equal to lower taxable baseline. We could discuss anybody who's interested, even free strategy session with me after the webinar. That's great too. You could make an appointment and I spend 20, 30 minutes and we can look at your situation, how we could help you at all. I'll direct you, I'll put you in anybody who can help you save on taxes. That's where it's all about. In a volatile market like this one, stock market is up and down and up and down. Sponsor track record is very, very important. Market fundamentals are very important, right there. Demographics, jobs, conservative underwriting standards are very important. A lot of people got into trouble in last 3, 4, 5, 4 years because they were overpaying. Didn't buy anything because I couldn't make cash flow work. It's not the cap rate, it's not anything. It's how the underwriting is done. Right start. That's when you start. And then clear strategy. So let me just stop right there. I have lots of friends who have joined. So let's just say thank you again for joining and we'll answer your questions. I have a lot of other things to discuss also, but please open up your mic and ask me some questions. Thank you, Kimi, for being here, Anna to be here, Jeff to be here, KD Carr. Thank you so much for being here. Sabi, Helen, Sati, Anil, right there, Anilji, Kevin, Seth, Lulu, and Mark, and Jamatira Chaudhryji. So please ask me some questions. Could you say what's on your mind in the chat room? Please ask questions in the chat room, if you would.
Or if you
I'll
can raise
just
your hands and then I'll unmute you and then you can go ahead and ask your questions.
thank you. Yes, please. What's on your mind? Why did you come to the webinar? Please tell us. Please tell us because I want to, maybe other people also have the same questions on their mind. Hmm? Hello, hello, hello.
Yeah, we have a question from Sabi.
Okay,
For all
please.
these to work in your favor, do you need to have contacts?
Okay, what is it? Say that again.
So, Viniji Sabi is asking, for all of these things to work in your favor, do you need to have contacts?
Context of what?
Contacts, Viniji, CONTACTS. Like, Sabi, can
Okay.
you please unmute yourself and ask
Yeah,
the
please
question?
ask the right questions, Savvy. Yeah, please.
Finding
I'm not
properties and funding.
understanding. Henji?
Uh,
Okay.
Finding properties and funding.
Yeah, yeah. For all those work in your favor, definitely you have to learn, you have to find, you have to build relationships with the brokers, and then you find properties. You just don't find properties just like, coming into a webinar or anything, but you do find properties having some coaching and mentoring, and then they will tell you which websites to go. Sadi, I'm just trying to give you the, right answer. It's not happening right here. I can give you the property. Hey, go buy this and do that. I do that for myself. I do those things for syndications and all that, Savvy. Right, right. So all those in your favor when you say you need to have contacts. Definitely, you need to build. It took me 20 years to where I am today. 1 billion plus portfolio and everything, raising 220 million. It took time, effort, learning, lots of hard work, like the tip of the iceberg. People see Vinney Chopra doing well right now, but they don't see what I've gone through last 20 years. So finding properties, right? Funding, you're right. You have to have a loan. Otherwise, nobody's going to let you buy the property. So 70% bank gives, or 65% will give loan, but you have to have the net worth equal to or more than the loan amount to be qualifying to buy the property. So if you're not in those range, then you go and work with a syndicator or find people like me and others, especially if you like what you are here for, then you figure out if you're accredited investors only, we could only take accredited investors in my $50 million fund. So we have a 50 million. We just bought a hotel in December. We are buying one next month. I've got third one, which we are doing in Ohio. It's going to be bought in it's already bought. Sorry, it's already bought. We are renovating it, but we're going to be raising money. We are putting 60% our own money into the deal, and then 40% will be coming from our investors. So that's how we do it. So thank you for asking, Savi. I hope I answered it right. Next question, please, if you will.
Uh, Jeff, I see you have unmuted yourself. Do you have a question or okay?
Oh, sure.
So
Thank you. Thank you. Hi,
there were two
Satiji.
more
Hi.
questions.
Please read it. Thank you.
Okay, so Katie Kaur is asking, do you think it's easier to get loans from banks or private parties?
Okay, both, by the way, because banks are very stingy. They have been very stingy for the last 4 or 5 years. But now, hopefully, with President Trump getting new, Jerome Powell going out, I'm not saying anything, but maybe interest rates will be tending downward. That's going to help. But local banks are the ones. I used to get so many loans in Houston area. I bought 22 properties, multifamily assets around Houston. And I got so much loans. Bank will love me because they saw my track record. So you can have a track record. Banks will give you money, and institutions, insurance. We are buying hotel, Hilton Hotel in Florida. Insurance companies giving us the loan because we have good track record. So they will give you money, or private parties. Yes, definitely. There are a lot of people who are we call them as small offices, small office entrepreneurs, and they have millions of dollars. If they like your product and they know you, they can trust you, they can vet you, then they will give you loans also. So easier to get loans from banks or private parties. Both my answer. I mean, I have gotten $24 million loan, $30 million loan, 60, no, not 60. My partner and I did it together because that was a very big property in Orlando. We bought for 52 million, sold for 64 million, Bentley at Maitland. I mean, everything I tell about is what we have done, right? Let's go to the next one. Satiji, thank you. Let's see. Can you please go over your view of the 2026 investment market locally in California versus out of state like Texas, Florida, etc., for maximum cap rates in multifamily and risks associated with either strategy. Thank you, Satiji. I would say, if I may tell you the truth right now, I have zero multifamily in California. 20 years, I've not bought a single one. Maybe there are some great opportunities out there, and you should get it. The thing is cash flow, cash flow, cash flow. Never buy a property that it's going to grow its value in so many years and the cap rate is going to compress. When I was buying in 20 years back in California, I couldn't afford it even then because I didn't have too much money. My business, I started with $1,000. $1,000. We were millionaires, but my family didn't believe in me. They said, no, 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 don't take our money. They gave me only $1,000. I borrowed money. That's how I got started from my good, close Samaritan. And he was a partner with me. He brought $150,000 into loan. That's how I started the whole business. But what you are saying, Satiji, is right. You could buy great deals. I know some people, and I would say that it depends. In Los Angeles, if you're in the Los Angeles area, there are affordable housing is very big. I don't really do a lot of research into California because I have no reason to buy in California. I'm buying so much good stuff outside. Why don't I buy that? Much cheaper and it's going to go in value much faster. So, and I don't like the laws of California either, with the tenant laws and all that, and all those things. So I'm sorry. I'm sorry. My experience is Texas, Florida, Virginia, Phoenix, outside California. I apologize. But we could do a small session. I can teach you, show you how to find those things, on your own. No problem. Maximum cap rate. See, what you're talking about is when you say maximum cap rate, you're talking about 10% cap rate. I mean, we're buying a hotel, Hilton Hotel, at 12.75 cap rate. Beautiful hotel, $6 million revenues. But that's where it's not in California. There are foreclosures going on in hotels in California right now, I can tell you. But we are buying hotels like in Ohio, in Florida, in Texas, but we are buying them at a very high cap rate, not in California. Sorry. Okay. Thank you. Any other question? Thank you so much. Yeah, but let's go into more stuff. Let's see here. I'll just share the screen again. And please keep on typing your, the questions, please, because I don't want to do anything if it's not applicable to you all. That's the number one thing. I don't know what. Oh my gosh! Okay, this is what I've been looking into the hotel actually today, which we have bought for 13 million over there. Okay, help me. Okay, there we are. This is the PowerPoint. Vinny, you are an engineer. You should be able to find it. It's giving me a little bit trouble here somehow.
What are
Meeting
you looking for,
outline is
Viniji?
there. Huh?
What are
I
you
was
looking for?
going through my whole presentation. Oh, there they are in the
Yeah,
back.
they're all
I
open
didn't
in the
turn them.
background.
Yeah, yeah, yeah. So sorry, everybody. Okay, I'm here. So let's go here. And can I do the whole thing? May I have to go like this only? It's a PDF. Okay, please, everybody concentrate with me. Earn more, keep more, smile more. Powerful strategy, protect your wealth. And again, thanks to my daughter and Monica, she's in our business, who has put this together. Took 9 hours yesterday to put it together. So are you playing the old book, which I talk everybody, in California, we pay so many taxes, 37%, which is federal tax, top marginal bracket sooner than later. Then we pay California tax, 13.45%, and usually it comes to 51%. We pay half the income up to May or June. We keep on paying taxes January to June. We don't get paid a dime. We pay the government, in our country. Anyway, which is okay. But by doing strategic shielding, you could really stay in the old way, or you could do Vinny way, dynamic shielding of the different things. So let me go to the next one. Are you paying the old way, like, inflation trap? A lot of people say, Vinny, I can make 4% in my IRA, I'll be happy. I said, no, 4%. The inflation is 7% or 6%. I mean, so actually we are losing money. If you're making 6, 7%, even you're losing money because inflation is eating your dollar power. So that's where you have to look for assets which are making you 12% or 14 or 15 or 20%. I know stock market has done really well. I mean, S&P, I'm very glad my stock market has done well, my real estate has done well. But the thing is, you have to really not get into the trap of the inflation trap, lack of control. You cannot just use cost segregation on a mutual fund. A lot of people tell me, Vinny, I've got $1 million here sitting. I've got 200,000 over here. I've got all that. I said, okay, whatever you make, it's ordinary income. You've got to pay taxes on it. So that's where you have to really, everybody watching me right here, please don't let these dollars go by at the end of the year when you do file taxes. The solution is self-directed IRAs, self-directed 401k, self-directed where you take your retirement plan from Wall Street to Main Street, Main Street. And in Main Street, you could invest that money, checkbook control, through the custodian, Pensco, Premium, this, that, U Direct, Advanta. I mean, all these are SDIRA custodians. You could bring that money into the self-directed vehicle. Now, guess what? All the money that you invest from there, it's not going to show up in your taxes. Zero. Because it's going to grow within the SDIRA account, cash flows, equity gains. It can become so big that you are not going to pay any taxes until you withdraw when you are older, 65, 69, whatever. I'm not a CPA or tax attorney, but that's when your income will be so small and you're going to withdraw, pay less taxes. But if you don't put them into the self-directed IRAs, everything in your Main Street is showing up for you, right there. Okay. The other thing I wanted to, okay, let's go to the next one. Tax-free mindset. You got to have the tax-free mindset and have them different buckets. It's time to partner with the IRS. They're actually waiting to reward you. I say that. I mean, why I'm in real estate? I used to pay millions of dollars in taxes. Don't pay taxes now because I don't need to. I get, oh my gosh, OBBA. Does anybody know what that is? That is the big Trump gift. Mr. Dr. Mr. Doctor, Mr. Trump gave everybody a very big gift as he came into power last year. 100% bonus depreciation. It was going to go down to 20%, and now it's 100%. Every dollar we spend in our renovations and all these things, you are able to deduct it. Bonus depreciation and cost segregation is where you take 5-year, 10-year, 15-year bucket and put that all also into your, the property could be making a lot of money, like I showed you, a lot of money. But the paper loss, depreciation is a paper loss that makes it negative. And then you get K1s from our company or other company as active income, W2 income in hospitality. I'm just saying it. I'm not a CPA. Check with your CPA if they've not told you. Hospitality is an active business, and you could sign and you could invest at the property level and only work like 100 hours, I'm told, in a year 100 hours, but you get all the money that you put into the hospitality arena. It lets you write off. I'm not CPA, but check with your CPA, please. And one big beautiful bill is something we should be really proud of. 100% depreciation, like this hotel we are buying. We're going to put 26 million in renovations this year. Guess what? All my investors, they're going to get 26 million minus portion of that, as much money they give me, because that's going to give them a whole write-up. I mean, we are buying for 13 million. We already bought it. We are putting 25 million into it, and it's going to be worth 67 million. We're going to sell it in about 3 years or so, like that. I mean, those are the properties that really you should be looking into with your syndicator friends or family, like that. Opportunity means you can write off the entire cost of qualifying hotel equipment, furniture, building improvements in the very first year. We are also deducting expenses and creating massive paper loss, all legal totally, to shield your cash. When we buy a Hilton or a Marriott today, we are effectively front loading decades of tax breaks into your first year of ownership. You get the cash from your pocket and massive shield. That's what I'm talking about. And then cost segregation again. Many of you might know it, but if you're using it, fabulous. But I just wanted to let you know this is the biggest thing going right here in USA. Tax laws are built for real estate people. It really is. The problem is the IRS slow drip. The IRS normally makes this. For the commercial property, they think that it's going to be worth zero. What I buy today in 39 years, it'll be worth zero. That's why they give you depreciation. But in fact, actually, I buy it here. I bought a hotel for 6 million, sold it for 12 million in 2.5 years in Texas, made 5,333 profit, and 1031 it into another hotel. I never paid any gain taxes legally. I didn't pay nothing. And then we cashed out the rest 1.2 million. Our partners, we took cash, went for trips and all that. The solution is deconstructing the asset, short life buckets, 5-year bucket, 15-year bucket, parking lots, pool, carpeting, furniture. And this is our 100%, the old, the big we just talked about. It's mind blowing. Whatever, we don't have to wait for 5 years or 15 years. You take them all in the very first year you buy the asset. I get so excited. It's just mind blowing what is fixing to happen in America in 2026. Those who are actively looking into investing and taking advantage of these things, they will do it. Those who are passive, sitting on the sideline and just analyzing, reanalyzing, they will just be left behind. The big win is we move 20 to 40% of the entire purchase into year one bucket. If we buy a 10 million asset, 4 million deduction right away. And if we put, like in this deal, 25 million into it for renovations, guess what? We get 4 million plus we get another 25 million bonus depreciation. So 39 million. We just bought the asset for 13 million, crying out loud. For 13 million, this big hotel. So it's mind blowing. It's totally mind blowing. The new owner advantage, the basis reset. This is, many people know it, some people don't. When you sell a property, it goes from my hand this year. I sell that same hotel next year to somebody. I took cost segregation in my side. Now I sold it. The new person who just bought it will do the cost segregation again. Oh my gosh. So why buying today beats holding for decades? Hitting the reset button, we call it reset button in our language. When we acquire a hotel, the appreciation clock starts, the new purchase does not, previous owner paid, and then unlocking the, what you call it, right there, acquisition day one, even the building is 20-year-old, the IRS, your acquisition is this, 2026 advantage, or it's the same thing. I'm not going to go over. And then hospitality advantage, 40% rule, a cost segregation gold mine. I mean, all that. Apartments, mostly structure, 27.5 years, hotels, all that win, repricing, inflation armor, operations, flagged. By the way, you know what? Do want to talk about something else right now, too. W2 Shield, right there. I'm a big believer in oil and gas. Maybe some of you know what I'm talking about. I have so many great opportunities where these are funds I have invested, my friends have invested. You get 85% deduction of your investment very first year as active loss, as W-2 loss, but you don't lose the money because you have invested that money. Like I put 200,000, I got 160,000, 170,000 tax break, right? I mean, negative K1 active against my active income, and then I got in dividends 8% or 9% per year. And then when they sell these oil fields, they're going to give my money back and the equity gain. So there are certain oil rigs where they just do one, it's hit or miss. I like the funds better. Please listen to me. I like the funds better because they have several different drillings in Texas, Permian basins, and all over, all over, all over. I do some seminars also. If you just say Vinney Chopra, oil drilling or oil taxes, and you will come up with that video. I just did one last month. So please, please try to do it. If you can save that, that's another one. I don't know. I didn't see it in this PowerPoint presentation. I just wanted to bring that up also. But again, we are very big into the hospitality arena because that's where money is made. That's where the cash flow is if you buy it right. And then, of course, forever wealth cycle. 1031 exchange. You can never go wrong with that one. Defer, reinvest, grow indefinitely till you die or anybody dies, then nobody has to pay any taxes. What? I don't know if you knew that. If you keep on deferring it, it's called kicking the can down the road is another term. So you never have to pay taxes. And if you die, your heirs are going to have the upgraded tax basis. So they pay zero taxes on all those gains whatsoever. There is like $36 trillion, I think, will be transferred wealth, which is becoming very big actually in this country right now. And a lot of people in the $100 million net worths and all, I've been talking to them. It's amazing how government will let you liquidate because 27 million or something you can get without the wealth tax, but then the rest of the 70 million or whatever, give or take, if you have 100 million to transfer wealth, that 70 million at 40% is 28 million you have to pay. And you have to pay in 9 months. If you die, if anybody dies, you have to pay in 9 months $28 million. Otherwise, they're going to start unloading your assets. Government will. A lot of people don't really care. I mean, but you got to know if you're a high net worth, which is this webinar is about, very high net worth people, 50 million, 30 million, 20 million, 100 million. So you got to look into that. Where is that 28 million going to come from? You know, and that's where you are able to go into life insurance policies. And there are lots of different ways to do it. I'm not going to get into it. I'm a life agent, never sold a dime. I'm a broker, never sold a home in my life. But I like everything to be in my mind to see what's behind the scene. That's how I make my best decisions. Anyway, zero tax leakage, 1031 strategy, repeat and rinse right there. Let's just go to the next one. Perpetual wealth machine, rinse and repeat. You can do it again and again and again. That's what I've been doing it. Hotels, apartments, senior livings. That's what some of you just say Vinney Chopra. I've written 4 books also, and I'll be giving those books to you. Those who stay at the end, I will give all the 4 books to you in digital and audio also. Well, 4th book just came out last week on hospitality. So anyway, the shield, initial shield cost segregations, bonus, all that, operate, grow daily. We do all the work. We operate, we grow daily, repricing cash flows, and then we exit and we give the money back. People can bring 1031 money into my fund and they can take money out also, tax deferred, all those things we are able to do. Oh, go ahead, Asma. Please do. Please do.
What, Vinity?
Questions. Let's ask the
Uh, oh,
audience questions because I
there
don't want
is no
to.
question right now,
Okay,
but
please
Mark
ask
Gilbert has
everybody.
said something. Mark Gilbert is
Please.
saying that with our Roth STIRA taxes are prepaid. So that's one thing that's in the chat.
Oh, nice. Thank you. Thank you so much, Mike. you're right, rebate and taxes, all those. So the thing is, you got to be a student and ask your CPA, who is your CPA? You should meet with them regularly every quarter, because at the end of the year, if you meet on 20th or 30th, when you're giving them the books and everything, they can do nothing. So I really believe in meeting with CPAs every quarter. Anything that's happening, you're buying or selling, or something is happening in your life, or divorce, or anything. I mean, or babies coming, or whatever event, which are life changing events, I call it. You got to talk to your CPA and pay them a little bit money so that they can advise you and save you ton of money. That's where I talk about. Let's go to the next one. Oh, okay, right there. I would like to ask Anilji. Anilji, what's on your mind? I know you're still with me. I'll ask some people. So please unmute and see what this seminar is doing for them or not doing for them, because we don't do these seminars just to throw information out. We want to help you to get to the next level. So please unmute. Kimi, do you have a question? Sabi also asked already. Jeff,
Vinny, we
would you
do
have a
have
question?
one question.
Please.
DJ is asking, what's the name of the oil fund that you mentioned?
Oh, good, 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 DJ. That's right. It's the king operating. I was there in Texas. I've invested my money. My partner, my next door neighbor has invested money. Please just go on YouTube. You will look at them, and then I'll put you in touch with Michael. Michael is the senior vice president who, works with me and everything. But you can look into that. Oil and gas, I love it. It's a $100 million or $200 million fund, and it's growing crazy. Actually, we show you in my PowerPoint where these wells are and where this oil is already been found. I mean, it's not that you're going to give money to somebody and they're going to start from, scratch drilling and they don't know anything. This company has over 200 years of experience. I love them. Love them. King Operating Company in Frisco or nearby there, north of Dallas. I spent time. Actually, the CEO, John Gray, I think, has written a book also on Amazon, and you could get a free book also from them. Anyway, most of the oil funds I met drill empty holes. Oh my God. DJ, talk to me, brother. DJ or DJ lady or guy, I don't know who that is, but
Yeah.
just
Hi,
talk to
Vinny. This is
me.
DJ.
Hi
Yeah.
there. Hi. Please
Hi.
talk to me quickly. Yeah.
Yeah. Most of the oil, funds that I met in different shows,
Yes.
um, they sell the fund, but then by the end of the operation, I see most of the holes that they have
Oh,
is empty holes. So all you can do is
oh my.
only just take deduction. That's it. So,
Oh, no, 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 no,
but I haven't
no.
seen oil in any of them.
Oh my gosh. Please, I'm just not promoting anybody, but please go if you want to find out more about me and what I do. I am here to serve you, and this is my channel on YouTube. Actually, Asma, could you tell me where is that the fund we just did for the oil?
Ye-
How do I go?
Yes,
Oh,
it's this one,
right there,
Vinny.
right
Yeah.
there, right there. Oh my gosh. Okay, I'm not going to start right now, but I'm going to do this. This is thank you for asking me. I'm going to do this so that everybody could listen to it. I'm not going to bore you to death, but this is it right there. All this is the right, company. Guys, you're in for a big treat today. Actually, I've got two great guests with me. Rachel and Mark are here. To 71 investors actually registered, and life comes on the way, and it might be their drive. Three books also. I do a lot of podcasts. Okay, I don't want to go through all that. I'm going to give you the nitty gritty. Combines. Okay, right there.
A
Let them.
wealth building asset. So it's truly remarkable what oil and gas provides to investors. And of course, we have Mark Ayers with us tonight, my good friend and colleague. And why he's here is to also just give some hard proof and evidence in geology of what he has seen, what he believes, And of course, you know, oil and gas has a lot of projections. We want to say that, but Mark definitely brings a wealth of experience and knowledge. So we're really excited to share with you guys tonight. And I'll go ahead and launch my screen, Vinny, and we'll get started
Yes,
with the
sure.
presentation.
Excellent, excellent. And then we'll have question answers also towards the end. Please do, put them in the chat and so forth, as I've opened the chat also right there. So look forward to it. We'll just
Yes,
see little
absolutely.
bits, so that you could get a
Okay, so
flavor.
introducing oil and gas is a very unique opportunity that we have here at King Operating. Of course, this is our disclosure information. We do work with plenty of attorneys. You can read through this with your CPA or your attorney as well. Let me get my clicker. There we go. So I want to just
Huh?
talk, Vinny, and I want to start by talking about
Wait a minute.
why oil and
Asma,
gas.
where is the power point? Oh my
Energy
gosh.
want to
I
act.
can't believe it. We put
So
it out there. It's
it's a
not your
wonderful
fault.
time to
It's my fault. We don't even have the screen share.
That actually shows the thickness of the oil in place. And I don't want to get into a lot of details right now, but you can see all the little turquoise areas. Those are places where wells have been drilled in the past, defining the field. There's 2 wells that have been drilled recently by King, and we're very excited about them having great initial flow back. We've only been flowing them back about 30 days so far, but already made 10,000 barrels of oil out in those 30 days.
Look at that right
so
there,
we're doing
guys.
quite nicely.
Right in front of
Those
you.
2
Right
wells
in
are the
front of
red
you.
sticks. You see.
And I just had a meeting with them just 2 weeks back, and they're going to pay me 14% returns.
So we're going to
this
not
year.
only develop it in the
14%,
middle
just the
canyon
cash
target,
flow.
but we're going to go
Plus,
and
I
try
got
to land it in the upper canyon
85%.
target.
This
And we're
is
going to
wrong.
do
Okay,
what we
I'm going to
call
stop.
line racking.
I
If you
am
got
very displeased because my fault or my team's fault. I mean, we put this out on the YouTube without even the screen
It's an
sharing.
old one. I'm fetching the link for the new one that we did last week. So
Can
just
we
give me
show,
two
please,
minutes.
quickly?
Yes,
Yeah,
I'm looking
please,
for the.
please.
Yeah, you can carry on
Yeah,
with the
it's
webinar.
actually in the
In the chat.
Dropbox, in Kit's Dropbox. It should be there, but no problem. Let's go ahead. Kate, raise the hand. Let's give the stage to Kate. Hi, Kate.
Hi.
Okay, I'll just come here. Yeah,
Hi.
thank you so much. Yeah, Nadia is coming in. I'll let Nadia come in. Hi, Kate. How are you?
Hi, how
Yeah,
are you? I have a question, please. So
yes.
I missed a little bit in the beginning, but I don't know if you also are familiar with stock market. Are you?
Stock market?
Yeah.
Oh, yeah. I made 179%.
Oh,
179% in 1 year. So I'm
oh,
very big in stock market.
okay,
Very
good
big.
for you. Okay, okay. And my question is, are you also familiar with margin, like options and
I
margin?
am. I am. Yeah.
Okay.
I don't do options. I'm learning options right
Uh,
now, but I'm very curious guy. 73-year-old, young man. I'm just like I behave like 37. Literally.
uh,
My mind
okay.
is like 37. I get
I
up at
see.
4 o'clock every morning, go to
Uh-huh.
bed at 11 o'clock every night, you
Okay.
know?
Um, yeah, and my question is, I'm not also familiar with option, but I recently used margin. Yeah, I do stock market and I recently used margin. I kind of over leveraged it. And then
Uh-huh.
I didn't know much about leverage to be honest, but when the market goes downward, it quickly goes down and it goes like twice as much. So
Yes.
my question is right now I am in danger of getting like liquidated by Monday
Yes.
if I don't meet like 130K additional funding, or if I don't liquidate myself. They say they will
Yes.
first liquidate me, and
Yeah.
they won't extend the margin call due date. But the due date is Monday. Do you know any potential way to get that 130
No.
funding?
Zero, zero. You have to put money into that fund to balance it out to zero, zero margin. Margin means you are not using your money. See, that's the problem. USA, it's the biggest problem. In USA, people get into these stocks and all, and go to Robinhood. Robinhood is making money like crazy, But margins selling, they say 7.5% or something. They charge you interest. People say, oh, I've got a lot of money. No, 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 no. You don't. And you should be ready for market fluctuations. I'm sorry, I can't sympathize with you. You have to bring money or sell your positions and take losses. That's the only way. Only way.
So
And never
yeah.
play options.
Mhm.
Never play options unless you know what you're doing. Sorry.
Yeah, I never did options, and
I see.
the
Yeah,
regular
margin.
stock, and I just use margin. But
Totally. Yeah.
um,
I use
so
margin. I use sometimes $3 million in margin, by the way, in my account. But guess
um,
what? I'm totally cognizant what I'm buying. And I'm not a day trader, but I'm a weekly trader or something like I learned some tricks of the trade. You got to learn. You got to learn. You just can't just go blindly. I sorry, I can't help you, Kate. Yeah.
I'm not asking you to help me, but
Yeah.
my
Yeah.
my question is, do you know if I can borrow that kind of money from someone?
I don't know. It's up to you, your family, I would say. Who
I
can
don't have
really
a
give you
family.
money without any collateral or anything would be nobody but the family. I mean, how can they give you 130,000 without collateralizing your home or something or some investments? I cannot answer as an attorney or as a CPA. I'm not one. I'm not. So thank you for asking me that. I know anybody can really be in a trouble if you don't understand where you're putting your money in. Some people got into trouble by investing in syndicators who paid a lot of money for multifamily. I'm telling you the truth. Insurance cost went up, the interest rates didn't come down, and property taxes went up. I mean, there are a lot of people in trouble in real estate. Real estate. So please vet it out. Don't put your money in blindly. Never, ever, ever. You should really be asking lots of questions. I wrote 3 ebooks actually, how to vet the sponsors, how to look at, and we can provide you. If you are interested in learning, the main thing I do is high net worth investors in this webinars where they are accredited. It means you have to have a net worth of $1 million net worth without excluding your primary residence. That's the SEC ruling. Or you are making 200,000 per year for the last 2 years, and then with the same possibility of making this year or next year and onward, and or in a family 300,000 per year last 2 years plus this year and with the same possibility. They are called accredited investors, and that's what I really have. All my investments are for only those people. I apologize. I used to do sophisticated investors. They could give me 100,000, but they were not accredited. But now we only do accredited investors. Thank you. Thank
Um,
you. Please ask some more questions. Yeah,
yeah, Vinny,
please
I
ask.
have, this is DJ. I have
Hi,
one more
Vijay.
question.
Please.
Um, do you have any recommendation on learning underwriting?
Oh, yeah. My gosh. Just come to my class Wednesday at 4 o'clock p.m. I've been doing it for 10 years. 10 years. I give free lectures, but once you like it, then you pay me 10,000 only for the whole year. Whole year. Yeah. And then you come and you bring deals. You get my whole access to my online academy and my templates and everything. Yeah. Yeah. Well, sometimes we have given it for 6,000 also, which is $500 a month. You get everything on silver platter, and you also get me 1.5 hour every Wednesday with other investors. Like yesterday, how many we had? 9 investors yesterday. But my investors make money. My top students are in 200 million portfolios now. 100 million, 200 million, 400 million portfolios. I showed them how to do it right, and they were able to crush it. I can do for them, but I can teach them all the underwriting skills and everything. But I will tell you even some other nuggets. Come next Wednesday. Next Wednesday.
Yeah,
Okay.
can you put the
Thank you.
link here for that class?
Yeah. VinnyZoom.com. Asma, could you please put it? It's my
Yes.
own website, VinnyZoom.com. You don't have to even remember the ID number of the Zoom. We just made the, domain name. Vinney Zoom or Vinney Zoom. Both of them will get you there. Huh? 4 p.m. Pacific up to 5:30 Pacific. I have been doing it for 9, 10 years, and it's been a lot of fun for me to give back to the society. And those who really want to go further, people pay me 100,000 one-on-one coaching, 100,000. I just come to you for free. Let's come. Okay. Anybody else has
Before we
DA?
proceed, I have put the link to the latest webinar we did last month.
Oh,
So
thank
that's the
you.
correct link
Okay,
in the
let's
chat.
open it. Let's open it. Okay. Can you all see this or no? Not yet. I'll just
No,
come
you're not
here.
sharing your screen.
Yeah, I'll share. There it is.
Coming
Okay.
into the
Now
oil
you're
and
there,
gas
right?
investing
You
webinar
can hear,
that we
right?
have put together. Actually, we'll be doing maybe one
There we
every month.
go. There we go. Does it have the sharing of the
And I've
screen?
written
Yes, it does.
Okay.
Forward-looking statement.
Oh,
So
thank you. Thank you.
why
Thank you.
oil and gas? I mean, everybody out there understands, and I'll show you a chart in a minute, that oil and gas is one of the most needed commodities to make our world run. Everything that we use in life, the average, American will come in contact with 6,000 petroleum products every day just for us to drive, to use our cell phones, all involves oil and gas. And specifically, what I want to show you on this slide is the actual uptick in the need for energy production. And it is a very steep climb here. If you see 2024, how we have really hit this peak in the need for energy, and specifically oil and gas. And as many of you might be aware, natural gas is really driving a lot of the current need within our country. That's based on AI and data centers and Bitcoin mining are all needing to have an energy source. And that energy source is being provided by natural gas. So energy is very much a demand for all of us.
I just skipped.
All of those
But
leases
please, you
with
could
wells,
download this
and then we
also
are going
from
to
the
digest
chat.
them. We're actually going to turn around and sell those
Right
for
here.
multiple. And that is where people are going to see that return on their investment at a much faster rate, a 3 to 5 year holding time period. So that's what makes our model stand out. The current fund that we're in, Vinney talked about, is our COP3 fund. It's a $125 million raise. It's going fantastic right now. We are very happy with the success of this current fund with our locations, which I'll talk about a little bit more, but you can see here we're targeting a 2.8x multiple on this for that 3 to 5 year time period. Okay, so let's talk about the assets, because those are really important. And that's what people love about diversifying their investment portfolio. Lots of people in their investment portfolios are going to be holding a lot of market-based stocks, right? You're going to have stocks, ETFs, mutual funds, and CDs, and that's great. But the thing about oil and gas is that you're actually going to be owning an asset, and that's a real asset class. So we have our 3 different locations, all within Texas, that we operate in. You can see them here. We have our non-op projects in Fisher County. We have our Bivens location, which I'll talk about more, and our mid-continent location. So these are all the different areas that you actually own and that you're a part of in our fund. So like Vinney said, it's not just one well or a small group of wells. Your investment is actually diversified, which helps de-risk it. Okay. I highlighted this today. I am not a geologist. We had a geologist on last time. You remember Vinney? Mark was with us.
Yep. Mark was with us. I remember.
Yep. He our lead geologist. He's an incredible gentleman, but I want to highlight to you, and you're like, what am I looking at, Rachel? It's a beautiful, beautiful color here, right? But what am I looking at? Well, this is actually the Canyon Lime Basin. This is in the upper part of Texas near Amarillo. It's 60,000 acres that we own. It's really what I would say it's our blue chip, right? It's our blue chip in this fund. And the thing that is really incredible about this location is that it is a proven oil field. We call that a resource play in the oil and gas world. And what it means is that the entire basin is already proven to have hydrocarbons, which is what makes it perfect for drilling multiple wells over and over again, right? That's what we want to see in oil and gas, is repeatability. that we're able to put in one well, knowing that we'll have 2 offset wells. Those are called PUDs, proven undeveloped. So
Yep.
that's how you begin to actually bring up the value of a location. As we drill more wells, it increases the value, which is what we want to see for a divestiture. So the Canyon Lime is a really special and unique opportunity to have 60,000 contiguous acres. We have 2 wells that are already drilled here, already producing. They're doing fantastic. We're really excited about our production revenue checks that will be coming out this month. And I'm going to talk more about this, but I'll just say this opportunity is already cash flowing. I know that I love a cash
And this
flowing
is the
opportunity.
green, the 2 green dots, right?
Yes, you
Those
got
are
it,
the
Vinny.
wells.
Yes, you nailed
Okay,
it.
right there.
Two
Yeah,
green
right. It's
dots
right
in there.
there,
Those are the
right there,
wells.
guys.
This is
Right there
also
in
a
the middle.
very rich basin in natural gas. So we have our natural gas pipeline going in. It has a lot of heavy natural gas. So we're excited about how that's also going to increase those revenue checks. All right, everybody gets to see the map of the Canyon Lime. I actually said I think this should be like a cocktail. The Canyon Lime cocktail, right? It's a beautiful name for a location. So let's just talk about energy deals. Now, we all hear about big real estate deals. You know, you might hear about a big real estate acquisition and say.
Well, I'm taking a little bit more time here because for high net worth individuals, this gives a biggest W2 loss. W2, active income loss. I want to say that again. What you make, what your businesses make, when you are actively involved, you don't get too much, deductions to save on taxes. But passive losses, you have to have rental incomes, passive incomes, accumulate as much as, and passive losses in K1 will only offset passive income. Active income, W2 income, bonuses, dividends, stock sales, capital gains, they are all active incomes. So those you will be able to only deduct with strategic alternatives like oil and gas. That's what we're talking about. And I'm so proud that I've been, investing into these, and it's going to give me money, my money
Or
back,
business acquisitions and
and give me
sales, right? You can hear about these
85%
major
first
companies that
year
are buying and selling
deduction.
all the time. What happens in the energy sector all the time? And this is where larger companies are always looking to acquire those oil fields that then they can go in and develop to the max. And so that's really what we focus on here in those opportunities to develop a field, is that we're really proving it up so big companies can come in and they can buy it and they can fully develop them. So I just like to highlight that all the different deals that happen every day, literally every day, especially in Texas, in these,
just like
in these
real
oil
estate. I
areas,
love
oil and
them
gas areas.
because they sell them. Look at this here. Oh
And
my
now we're
gosh.
going to look at what I call the 3 pillars of value for an investor. And this is the reduced tax liability that draws so many people to the oil and gas opportunity. And I'm going to break it down in a much more better illustration in a minute. So the tax benefit, number 1. Number 2, monthly distributions, right? Everybody wants passive income. I mean, it's wonderful to, we'll say get a check in the mail, but most of us are probably getting a deposit into our account. But it's funner to say a check in the mail. This is where you get a check in the mail. And that is, we're already cash flowing. We already have distributions going out. So our projected numbers for this fund are 9 to 14%, although we are anticipating higher distribution dollars going out. This is our conservative estimate for this fund. So
and this is
the
per year,
upside multiple,
9 and 14
that's
in
when we
between.
sell and divest properties, or we'll call them assets. That's where you're going to see a multiple on your investment.
So this is a good one, guys. Everybody, please see.
Wonderful tax advantage. And this is such a great opportunity. There's a lot coming out about tax-aware investing. Tax-aware, tax-advantage investing. It's where your investment is actually a part of the IRS code saying, we want to thank you for helping drill U.S. wells and produce U.S. energy, and that boosts our economy. It provides jobs, and it keeps us energy independent.
Yeah.
So let's just take a look. If you were to do, now, I'll say right now, our minimum investment is $50,000.
Yeah,
it's not
they take
200,000, so you don't have to be thinking, oh, I need to put 200,000 in. No, you
Yeah.
can start with 50,000, and lots of our investors increase their investment amount through the year. They usually add on. But if we took a $200,000 investment, we would use a modest tax deduction factor. That's from King Operating at 75%. We usually see between 80 to 85, but we'll say 75. So that means you're going to see a year one deduction of 150,000. That's going to go against your active income, your total income, your adjusted gross income. That goes against capital gains, all of that. And if we use the 40% tax bracket that you're in, if you're in California, it might be higher than that. Might be more up in the 50% marker.
51, 52%. Yep.
Yep.
Mhm.
You're looking at a cash on cash savings of $60,000. So that is basically almost a 30% return on your investment up front, which is pretty tremendous. And that's what is really incredible about the oil and gas opportunity. Our track record here at King Operating, like I said, we see 82% on our K1s. We've achieved our average distribution rate at 7%. And of course, we're looking at much higher in this fund, but we're happy with that track record. This is just going to give you an overview of how we are projecting the fund to go. Now, this is projections, right? But we are on track, although we like to give that modest number of 9 to 14%. Right now, we actually see with the way our wells are producing that our distributions could definitely reach up into that 20% marker. And of course, with oil and gas, it rolls a little bit as wells are kicking on. They're producing much higher flush production. So this is an overview.
This is, by the way, at the bottom.
This
year, guys, everybody, please look at the bottom. This is just January, February,
and this is just real
March,
quick, and then
April.
we'll talk more about the whole opportunity. Yeah. Just if you're wanting to invest, it goes pretty quickly.
Anyway, we had lots of people and everything. They asked a lot of questions. So I'll stop it here. Thank you so much, Asma, for doing that. And we'll just go outside and take care of. I need to stop. Sorry. Okay, got it. Let's go back to our investors. Yes, please.
DJ is asking again, can you talk about long-term facilities investment?
Long-term?
Facilities investment.
Facilities?
Yes.
Okay. Well, long-term facilities, if we say real estate commercial is a facility, could be triple net leases, which I am very big on those. Medical offices, I'm very big on those. Of course, hotels, we just bought. I can talk about it. That's a facility in Dallas, Texas, north of Dallas, in Plano, Texas, Legacy West area. Legacy East and West is beautiful area. All these Gucci stores and all those. I love Gucci and, oh my gosh, all these, big things, Louis Vuitton and all that. But we just bought a hotel, Marriott Courtyard, for 14 million five. Wow, foreclosed. It's making $1 million profit already. It's 70%, 60% occupied, whatever it is. But I was there last week. 100% occupied Monday, Tuesday, Wednesday. This week, actually, it was 102% occupied, 102.6% occupied. So what is that? Because we know where to buy these deals, any kind of facilities. So medical buildings, I love storage units. I'm not liking multifamily right now because I sold mine at peak. I'm so happy, and so forth. But key thing is you can be looking into anything, senior livings. So are you talking some other facilities in mind? Please explain that more. You could take that hotel, the one Legacy hotel. I raised $4 million from my investors, and my partner did $4 million. We raised $8 million. We bought the deal, $9 million loan, and it's going to be making so much money. We bought for 14.5. We're going to sell it for 29 million in 4 years. You mark my word. I mean, you can come back to me and say, Vinney, you said that in that webinar. We're going to do it because we're going to change the inside of the hotel by putting 3.6 million more, and it's going to become Generation 2 Courtyard Marriott to Generation 6 2027 model. What? That hotel, we're going to change it. It's a legacy hotel. It is such a beautiful hotel that we don't want to even sell it. Just like you said, you want to keep it for many, many years. So we'll ask our investors, do you want to stay with us after 5 years? Or do you want to just take your money, the gain and everything, and unload? And we won't need any money anyway, because it's going to be making so much money. We're going to refinance it and cash out those investors who want to cash out. Rest of them can stay with us for 10 years, 15 years, because this hotel, Disneyland is right there in Disneyland. Disney, and all the Fortune 500 companies are there. Maybe I could show, we have a little bit time. I could show something. I don't say all these, things that nothing is there. Everything I talk about is what I do. I've been doing it for 20 years. Everything I say, it's not somebody's deal. It's my deals. I buy them. 1.3 billion from $7 when I came in this country. I learned the business, and then I took $220 million of my investors' money, and then I bought bigger and bigger and bigger and bigger things. I bought, all those things. Anyway, any more? Did I answer your question? Okay. I don't want them to feel that I didn't answer it correctly. Asma, any other thing you have?
Can you talk
No,
about
that's
senior living?
Senior living, I would love to. Actually, I'm going to show you all senior living just in a second. Let me go ahead. I'm going to show the senior living I built in. Oh my gosh, why do I not have my things in right place? Punta Gorda. Okay, I'm going to show you all something very special. This is the senior living I built actually from scratch. Oh my gosh. I'm sorry. Vinny, calm down. I'm a 27-year-old man. Let's see. Where is this? Right there. I'm going to show you. Senior living is where I wrote the book also on Amazon. Senior Living Investing Made Easy. Because I've been in senior living for 8 years now. When I turn, I'm 73 now. I'll be 74 in August. See, seniors, this whole country is going to be seniors. 25% of population is going to be seniors. All the hospitals, all these senior livings are going to be at the premium price because nobody's building it. It's just so ridiculous what's happening in USA. Lot more seniors will be needing assistance and memory cares and all. So, if you want to know more about it, go on my YouTube channel. Just say Vinney Chopra Senior Living. That's all. You'll come across so many videos that I've been putting out there with webinars and everything. Let me show you right now. This is the building that I just built. I was standing underneath a tree. My partner and I bought it. It's in Punta Gorda. We built it for 12 million and something. Sold it for
Hampton Manor
18 million.
Punta Gorda features
18
the only
million.
66,000 square foot
So please take
one-story
it.
facility in the area.
I hope you can hear.
At Hampton Manor of Punta Gorda,
I
our
built it
residents
right
get the
there.
daily support they need while remaining
Look
as
at that.
independent as possible. We extend our highest level
And
of service
seniors
of value
are
and
dignified.
quality.
Look at
Everything you
inside
were
what we
looking for in an
put.
assisted living community.
It's amazing. Look at that. So we built it and sold it.
All
My
award-winning
partner,
meals are
other
created in
companies
served
managing
restaurant
it.
style at our facility.
So we cook. Our
Our
chef
stylish
cooks.
beauty salon will have you looking
Beauty salon
glamorous
is
in no
there.
time and in the know.
And then we have few other. It's a little bit longer
Our
one
luxurious
somehow.
spot allows you a tranquil
Oh,
place to
spa.
unwind and
There is a
distress.
spa. Yep. Right on the corner. So we build quality. We build really amazing things for our
beautiful,
seniors,
elegant
dignified.
private dining room.
Private dining rooms for birthdays and all that. So your families
With
can
3
come and
gorgeous
visit.
garden courtyards, residents can enjoy a game of pot golf.
Yeah. And I don't like to build too many stories. I like them at the bottom floor so that they could travel,
Residents can also
walk
enjoy our
around
beautiful
and all,
in-ground swimming
enjoy
pool.
their life. Just a little bit more, then we'll go question answers. Then we have very little time left at the end. Oh, it's coming
Enjoy
right now.
time socializing at our coffee bistro.
Yes, we have
The club
bistros.
room is designed for some hearty pool or card games and more.
See, this is senior living. Look at that quality.
And right
We are
around the
very
corner is our private library.
library.
The modern
Seniors bring
theater
their own
invite you to indulge your
movie
senses
theater.
and a delicious bag of popcorn and your favorite movie.
Yeah, my partner has, and I have built only four. He has built over 40. It's amazing. I mean, what seniors get
The
as
spacious
quality.
sunroom invite you and your guests to take an afternoon
Anyway,
spacious
I mean,
restroom.
it's just beautiful and it's a nice,
Our
memory
entertainment and
care
common
is
areas are
separate,
inviting
all
and
that
our
stuff.
staff will
But let me go ahead and answer your question, sir. You asked me senior living. Yes, senior living is amazing. But because of COVID, it hurt that market also at the same time because some deaths happened. In our senior living, we had zero death, because we followed CDC guidelines. We closed the entrances and everything, and the families couldn't visit our seniors. They did through plexiglass, just like in some of the banks they do it like that. So this was seniors were on this side of the meeting room, and their family was this side. We did video calling and all that stuff, through computers, so that they could see their family and all that. So we were really, but the bank stopped actually giving loans to people who were building them. I'm one of those person that have been hurt in that whole thing. I built Punta Goda with a lot of gumption and everything. Then my second one, the third one, we are still struggling and finishing it up. Then the fourth one and all that. So I'm just saying, senior living is here to stay long time. So please ask me more questions about that if you have any more questions, please.
Viniji, Satiji is
Hello,
asking a question. Satiji is asking a
please,
question. Do
Anji.
you have plans to build additional senior living facilities like this with investors? What was
No,
investor return
zero.
when sold?
Zero, zero, because the clientele. I mean, it takes me 4 years, 3 years to build these livings. I can convert any kind of building into if it's like a suites hotel, 1 story. I can convert that and add more additions if the city allows me, and I can convert it into a beautiful place. So why should I buy from scratch? Built it from scratch. But there are different people, different things. I think getting a loan, construction loan, is the biggest challenge. Very big challenge, Satiji. So I know you are in that profession. I know you a little bit, but I will not do it. I will not do it. I mean, I just lost my shirt over there in Phoenix, Arizona, and I'm saying that legally. I'm saying that to teach you all, because I lost $300,000 in 1 year. $300,000. I bought $1.2 million, 10 bedrooms, 9 bathroom home, converted into an assisted living, got the license and everything. I had the hardest time getting seniors in my building because it's a mafia. It's a mafia. People do not like to bring people in. They want to only give to the people who are connected in that market. Then in Scottsdale, I bought for $1 million another home. I was crazy. I should have done that. I bought it, both of them, and I sold them. I lost 300,000 because I got up to six seniors in my home, made zero money, because you make your money when you are 100% occupied. Your profit is in the ninth senior and the 10th senior. In California, it's only six seniors. How can you make money? You can make money in where I live, Country Club here. It's $15,000 per month. People pay. Outside the Country Club, there is a senior assisted living. Outside, they pay 15 to 20,000 a month. If you're collecting that kind of money, then you can make good money. But if you're charging only 4,000 like me in Florida or anywhere, I'm just saying you, this is the truth. I don't lie. I just want to let you know what it is there in store for you. You could convert some buildings, hotels into senior livings. I was going to buy a comfort suite in Phoenix. I decided against it because the city gave me permit, but then the architect said, Vinny ji, you have to put 300,000, 200,000 of elevator. And these units, suites are even smaller. You have to put a partitions in there. You have to change the door going into the bathrooms and all. The space is not there for the wheelchair to move around. So all those things are there. I've learned so much in my life, and if you really want to, have personal attention or, pay for my consulting, I can consult with you. People pay me thousands of dollars to consult, but if you want to just go in the dark and do things, that's okay too. No worries. Okay. Any other question? We have only 8 minutes left. Let's just go back here. Asma, you had given me that PowerPoint presentation, please.
Yes.
So I would
So,
like
Mr.
to
Vinny,
thank.
this is
Uh-huh.
Anil. Sorry, I was
Uh,
eating earlier when you called me, so I just finished.
uh-huh.
So,
Sure.
if I want to be an investor, what's the minimum criteria and what do you look for?
Okay, you have to be accredited investor, an LG, and also have a lot of money. My minimum is 100,000 or 250 or a million. Most of my hotels, I just raised 4 million with 6 investors. I have 582 investors who have given me, but I'd love to take new investors also. I would love to work with you. I've got 7 hotels more. This is my third one. I've got 5 more, 4 to 5 more hotels coming. They're going to make oodle of money. So much money, you won't have any problem at all, really. And the key thing is, my partners started in hotels at the age of 13, 17, and 22. And they're 55 years of age right now. Some are 33 right now. I just went to a wedding in Cabo. My very good partner, Umang, he's 33 only. I'm 73. So we are joint at the hip because he breeds hotels. He knows everything about hotels. He knows every person who bought a hotel in America. He was the vice president of the Ahoya or something, 9,000 members. So anyway, the strategic wealth is your choice. It's not, that you get it just like that. Hospitality, my book. Everybody, please, if you are into, looking into what you can make and this and that, Amazon, we just pre-launched it last week, and it's a beautiful book. We got only one, review so far, and they loved the book. So it's a 400 pages for 99 cents. You could buy it at Amazon. I'm just telling you. And then just for coming today to the webinar, please scan that code right there, and you get all my 4 books for free. All the 4 books.
Now,
But
Vinny, this
this
is
is
the
the
link to Amazon. That's the
Oh,
separate
this is the
slide
link
that
to
will benefit.
Amazon. Okay. So you could buy this book for 299 Kindle edition. You could buy this one for 299 Kindle edition. And this one, Kindle is on your iPad, on your laptop, on your computer. You just download Kindle, then you could read the whole book right there, while sleeping in the bed, also on the iPad, you could read it, all that. And then you also have audios of all these 3 books. I have a Spanish book also, version of this one also. We should put that also. Kit, I mean, Asma, maybe we can do it. And then
Sure.
Hospitality is my new book. So this is at Amazon. Let's go to the next one. And this is my $50 million fund, which I already have PPM and everything. I said, I can take money tomorrow. Like I'm buying this $13 million hotel we just bought. Its replacement value is $90 million, 90. If I build it today, 92 million, it will cost me to build the hotel. We just bought for 13 million. I am so proud of my team. And now we're going to put 25 or 26 million into it and sell it for 67 million conservatively in 3 years, in 3 years. So please go ahead if you want to invest with me also, with my company, Money Investor. We are a boutique company, billions, portfolio, invest. VinneyChopra.com invest. And then the next slide, what is it? Let me show here. Okay, my clone is there. You don't even have to talk to me for smaller questions or anything about real estate and mindset and positivity. Just take this one. Oh my gosh, right there, Vinny.ai. Write it down, and you can talk to me in 12 different languages. If you're around the world, people are actually sending asthma from Taiwan, from Philippines, from UK, from London, everywhere. I mean, UK, London, same thing. Australia, I meant, and some from Africa. People are talking to me all over the world and getting their questions answered in the right way because we have fed into my clone. We have fed all my books into it, all my videos, all my coaching things, everything is in there. So I even answer better by my clone. So Vinney.ai. And then this is the one which you want to join, starting every Wednesday, 4 p.m. to 5:30 p.m. You can get started for only $97 per month. We even spend it that much money in eating a breakfast or lunch, with the family or like that. This is $97 a month. You get to meet me 4 times, and it's only $24.99, which I was saying $10,000. So we must have done a special on it or something. Anyway, it's okay. But $97 if you want to join. You can definitely join. Just let us know. Reach out to Asma, myself, or text. Just text that you want to join this number. You want to join Vinny on his mastermind for only $24.99. You will get millions of dollars. I mean, I make millions of dollars because I learned and I paid a lot of money to the coaching. I'm not selling my coaching. I make money in buying deals. And that's what I teach. So I've been teaching 10 plus years. Is there anything else here, Asma? Oh, there it is, calendar. If you want to
Yes.
make an appointment with me, just go to vinneychopra.com/calendar. And then you will go to a place where you will be able to. Oh, there is the book right there. Okay. Oh, free benefits. So this is where you get all my books. Please write it down. Can you put it in the chat, please, Asma?
I have
Yeah.
Viniji. So all the
Oh,
links are
thank
in the
you.
chat already.
Okay. Thank you. Thank you
The
so much.
AI calendar, free benefits, everything's in the chat already. I'm putting it again.
Thank you. Thank you, guys. Thank you so much for coming into the program. I really appreciate each one of you. I hope I've given you lots of things and done justice for your time that you've spent with me. God bless you. I'll see you in the next webinar next month. I only do once a month, but you can reach me, through texting and all that so that I can provide value to you. Okay?
Yeah, we need to
Thank you.
one more
And
question before we go. DJ is
sure,
asking,
sure. Uh-huh.
um, is there a trial period for coaching? So DJ, you can come into mastermind coaching next week at 4 p.m. PST. And
Yeah,
if you like it, then we can proceed from there.
yeah, we can go from there. Sure. You can come twice for free. After that, it's $97 or whatever it was. I think I didn't know we kept that special ongoing. That's good. I want a lot of people to be successful. I'm not making money. I'm making my money by selling and buying and all that. I just want to give people so much knowledge. And I'm writing my fifth book and the sixth book and my shows every week, 2 shows, live shows come every week and my podcast and everything. So I want to serve people. That's what my goal is in life. And I'll live up to 93. I'm 73 right now. I'm going to live to 93 because my grandpa passed away at 94. So I have that picture in my mind that I want to eat right, exercise, and make sure that I'm very active, not passive, somebody sitting on the couch as 94, 95, 80 years. I want to be standing right here with you, and teaching and giving my best. Thank you so much. Any other question? Okay, good
So
night.
DJ, it's not $97 per meeting, it's 97 for a month for this
Per month,
special
per month.
webinar.
Yeah.
So
Thank
you
you.
will get four
$97.
sessions for 97
Yeah,
a
if you
month.
can't afford 97, don't join me. Please don't join me at all. Because if you're not even committed to investing $97 a month to learn the tricks of the trade from a great person who can really teach you, there are people who are charging $50,000, $40,000, right? But if you want to come, please come. We'll love to have you. Thank you so much. Good night, everybody. It's a teen patti party and a little bit wine. It's going to be a fantastic night for me. I'm meeting my great friends for some special evening get together. Thank you. Bye bye.